I am Saharsh Krishna, a high school senior from Johnsport, Georgia. In this presentation, we will discuss about the concept of volatility contraction pattern, shortly known as VCP, and explore how it can provide valuable insights for traders and investors in financial markets. Volatility contraction pattern refers to periods when price volatility decreases dramatically. Contraction means that price movements becomes way calmer. Daily price fluctuations get smaller and trading ranges tighten. Imagine being like a battle between buyers and sellers. It signals a tug of war between buyers and sellers has reached equilibrium. VTP is seen as a calm before the significant price swings emerges, which way the price breaks down and can indicate where the market might be headed. This pattern essentially tells us that the market isn't certain about its direction. Identifying these VCP patterns early is super important for traders. It's like getting a heads up for the next significant move. It helps to predict which way the prices might go. Traders who analyze charts watch for the patterns. They're helpful signs that the market might be able to on the verge of changing directions. And if you spot them early, you can make the wise choices. Recognizing the contraction phases, the key indicators of one, parallel channel forms. Tight range hints at contraction. Two, a cup and handle pattern. Cup volatility exceeds handle. Three, multiple smaller cups, decreasing volatility. Four is gradual volatility reduction, narrower daily ranges. Five is obvious VCP patterns emerges, clear contracting volatility. As you see, contraction indicators reflect a decreased volatility, signals periods of indecision building in markets. Identifying each and early allows preparing for next major move. Watch for the signs to detect start of contraction phase. The key skill is for traders to capitalize on eventual breakout. Okay, now what is the duration and the watch list? VCP can last days, weeks, and even months. Contraction patterns and phases extends over long periods. Volatility and volume slowly grind down. Keep in mind, it requires patience. VCP is marathon, not a sprint. Futures and one. Add potential VCP setups to watch list. Two, review regularly after market close. Three, monitor for extended contractions, which are marked by decreasing volatility and volume, which identifies period of uncertainty indecision. So when VCP identify early, be ready to trade a breakout. Now, how can we identify VCP? Watch out for the volume. In cup and handle patterns, volume gets very low during contraction. This dry volume is a key indicator of the contraction phase. If volume is decreasing, it is not true contraction. The cup and handle shows how volume behaves as and patterns forms. Volume declines steadily. We can see it in figure. By the handle, very little volume occurs. Contraction phase can last a long time. The periods of decreasing volume persists for weeks or months. It represents a slowdown in trading activity. Don't expect the pattern to emerge quickly. Be patient waiting for volume to dry up. It is very important to watch the volume closely to confirm the contraction. Lack of volume signals reduced momentum. When volume spikes again, the new trend emerges. Analyzing volume identifies high. Oh, my bad. Well, give me a minute. Lack of volume signals reduce momentum. When volume spikes again, the new trend emerges. Analyzing volume identifies high probability setups. Finding the entry point is the most crucial thing, but the real skill is knowing when to enter the trade. The best entries comes after the contract ends. We must wait patiently for the volatility expansion. The surge in trading volume signals and breakouts. Volume need the spikers rapidly higher. Watch for volume extending previous levels. This shows conviction behind the price swing. It confirms the new trend is truly starting. Only enter your position after the volume spike. Do not anticipate the breakout too early. Entering as volume surge gives an optimal entry. This aligns you with the emerging trend right away. Volume analysis identifies a prime trade entry. Time entries after contraction with volume signals. This maximizes the potential for an outside move. The perfect entry occurs after contraction ends. When volume surges rapidly, higher captures the start of trend quickly and reliably. Queryable example in this figure, Sentinel Chart. As you can see, it shows long period of decreasing volatility. Trading range gets narrower, volume decreases. This signals a period of uncertainty in the market. Then volatility expands with a sharp price swing. You can see that the volume spikes up rapidly, which confirms start of a new trend. Key is in identifying contraction early. Wait patiently for eventual breakdown. Breakdown direction shows new emerging trend. Only enter trade after contraction ends. When volume surges, signal optimal entry. Entering here lets you catch a new trend early. Trading strategy is to set up a stop and loss target. Plan entries on volume spike, post contractions, a cup of handle, earn and enter on second candle, breaks of resistance. Use handle low as stop loss. Target is cup height. For candle low, lowest point is stop. Measure target from high, manage risk score with stop loss below half target. Let us see the real world. Tesla stock which experienced decreasing volatility and volume in Q4 2020. This volatility contraction pattern signal reduced uncertainties. Identifying these VCP presented by a buying opportunity. Traders could have capitalized on subsequent upward momentum. As I mentioned before, technical analysis considers price and volume relationships. The bull flag pattern has a breakdown with increased volume and consolidation. This shows the importance of analyzing both price and volume. Note that the highest cup height provides the price target, and the lowest cup height sets the stop loss level. Keep in mind that combining price and volume analysis gives more insights. This allows generating more profitable trading strategies. Recognizing VCP and bull flags illustrates using technical analysis to forecast prices, 5 better entries, set targets, and stop. The volatility contraction pattern, shortly known as VCP, is a powerful tool for traders. Identifying and trading with a contraction phase can lead to profitable outcomes. Incorporate volume analysis for confirmation. Carefully set entry points, stop losses, and target prices to manage risk and reward. Thank you for your time and hope you have a great time.